Hi, it's Eric Bird from the Loudoun County Small Business Development Center. We had a lot of questions this year from people about the assistance programs, the EIDL loans and the PPP program and the like this year. And as people are wrapping up 2020 and getting ready to finish out the year and look at tax season starting up soon, we wanted to get some information out to you about some things that you want to be thinking about here at the end of the year and then also at the beginning of January. So we reached out to one of our volunteer CPAs, Clint Thomas, and had a quick conversation. Here it is.
Yeah, thanks, Eric. Appreciate it. My name is Clint Thomas. I'm the owner of RKN CPAs here in Northern Virginia. We have offices all over, or 2 offices, Fairfax and Leesburg, but clients all over the Beltway and around the country, and specialize in tax planning, tax efficiency for a lot of small business owners out there and high net worth individuals. So anything with tax compliance or planning, financial statements, bookkeeping, we're the people to call. So
excellent. Well, I really appreciate you taking the time to do this today. Taxes are always often a little confusing for people, and especially this year, given all the assistance programs, it's really helpful for us to be able to ask some questions and talk a little bit about what to expect as we go into tax season this next time. So appreciate you being here. And with that, just diving right in, could you remind me briefly what taxes small businesses typically owe and are going to be having to look at in 2020?
Yeah, it's a common question. So, most clients out there are pass-through entities. They're S corporations, partnerships, Schedule C, sole proprietorships, or single member LLCs. And so a lot of times the income they're earning through the business is just passing through to their personal tax return. And so when we do tax planning, we're looking at what's the overall tax picture that really boils down to the owner's, shareholders' personal tax situation. So depending on your entity type, you may or may not actually have a W-2 from your own company. So if you're a sole proprietor or Schedule C, very simple setup, then you won't have a W-2. You would just, whatever your earnings are, that would be self-employment income to you that you would report on Schedule C of your 1040, your federal tax return. And so the first thing to look at is this time of year, since you don't have any withholdings per se, you would have hopefully been making estimated tax payments throughout the year and planning accordingly. Of course, this year you may have had income that had reduced from prior year. So there are certain quarterly estimated tax payments that are due throughout the year. And so the next one coming up is January 15th. That's your 4th quarter estimated tax payment due date for the 2020 tax year. And depending on how much you've paid in so far and compared to prior year tax, you need to be planning for if there's a payment due at all. And then those payments will be credited to you on your 2020 tax return that gets filed by April 15th this coming year. And of course, you can extend that if you need to all the way out to October 15th next year, but the tax itself is due by April 15th no matter what. But the IRS wants you to pay in your quarterlies based on your self-employment income as you earn it. And just one little note, there's several exceptions to how to get around any kind of underpayment penalty. You can pay in, depending on your level of income prior year, you could either pay in 100% or 110% if your income's over 150,000 of prior year tax. So again, 100% or 110% of prior year tax will be a safe harbor to avoid underpayment penalty. Or you can pay in 90% of this year's tax based on whatever the tax ends up being, and that'll also prevent underpayment penalty. You may still have a balance, but at least you can avoid underpayment penalty, especially in this year where things have gone down for some. So I hope that helps, clarify. And then the third exception I mentioned was something called the annualized income installment method, which is basically a long word for you get to tell the IRS in your calculation of the penalty, if there is one, that your income was up and down. So obviously this year, that's going to be really important for some clients to, instead of smoothing out your income evenly across the quarters, you can say, well, I was seasonal and my income went up, down, and it was all over the place. So that also might help reduce or mitigate the underpayment penalty if it applies.
So if, for example, if for cash flow reasons, because of the downturn and the economic, people didn't make a estimated when they maybe would have normally, that's something to look at. There may be some penalties and interest, or maybe you can try explaining that it was your revenue was very variable, and maybe that'll do it.
Yeah, that third way of calculating underpayment penalty is actually pretty common in an up and down year. And that may be something you want your tax professional to look at to help reduce any penalty you may have. But again, January 15th is your Q4 estimated payment date. And then April 15th, obviously, is still the due date for your personal returns. If you are an S corporation, you're then an employee of your own company, so you'd have a W-2 with withholding. One common strategy, real quick, is you could actually do a year-end bonus through your W-2, your wages through the S corp, and make that year-end bonus basically be just for the purpose of withholding. And that actually would, it's much better than making estimated payments, because that withholding will count as if it's paid throughout the year. And so if you're an S corp shareholder and you see that there's going to be a balance due based on your planning, think about a year-end bonus that might help as far as making up the withholding maybe you haven't done previously.
And that makes sense because it's all ultimately passed through to your personal anyway, and that makes sure you've paid your tax the way you're supposed to. Oh, that's interesting. Very good. That's very interesting. And so just as a reminder, and actually I'm glad you brought up that, the different entity types, because there's slightly different deadlines for different entity types. When are taxes actually due? When are the filings actually due for people?
Yeah, so if you're a partnership or an S corporation, it's due March 15th. And so your accountant is going to want you to get that information to them as soon as possible, because obviously the time flies here. It's going to get very busy in January, February. So, your accountant will communicate hopefully exactly when you need to have your information into them for your March 15th deadline if you're a pass-through entity. For your personal returns, or if you are a C corporation, which is a whole different animal, that's due April 15th. So just check with your accountant or whoever does your forms, your planning, and they can, I'm sure, advise you accordingly.
Excellent. So for those of you who have your calendars out, it's January 15th to make the estimateds, March 15th if you're a C Corp or partnership, and April 15th if you're basically anything else.
Well, if you're an S Corp or partnership,
S Corp, I'm sorry, S Corp, S Corp or LLC. Very good. Okay. So now one of the big things obviously that happened this year is there were a number of assistance programs that were available to businesses from the federal government and that rippled down into the local sphere from the CARES Act grants and things like that. So one of them specifically is the PPP loan / grant. Are there things that they need to know about or specifically take into account if they received a PPP in 2020? And can you maybe talk a little bit about how to think about that?
Yeah, so many people, businesses obtained a PPP loan. I believe last time I looked, it was 80 to 90% were under 100,000, if I recall. So the vast majority are smaller loans. I think only 24,000 of the PPP loans were actually over 2 million, and those are the focus right now. There was a 9-page questionnaire that recently came out to examine if those loans were even needed. So they're still talking Congress about automatic forgiveness of some loans below a certain threshold. We'll see if that actually happens. The guidance that came out actually just a week or two ago now is really the most troublesome or noteworthy. And that was the guidance by the IRS and Treasury that they clarified that if there is any reasonable certainty that your PPP loan will be forgiven, then you actually have to add back those expenses that go into the forgiveness calculation this year in 2020. So guess what? Now you have to add that back into your planning for 2020. So when you're doing your loan forgiveness calculation, which some clients were, really under the assumption that, well, maybe I can push this whole forgiveness thing off to 2021 and make it a 2021 issue. We already know the income is non-taxable. So we all thought, well, that's great, right? It's non-taxable. What a wonderful thing to help small business. But then now the IRS doubles down and says, no, sorry, even if you think you're going to get forgiveness, even if you haven't applied for forgiveness, that you're going to have to add back now in your year-end forecast for 2020. And it may impact your Q4 estimated tax payment due January 15th.
Because it's a little bit confusing about well, what's an add back and what's tax-free and what isn't tax. Could you explain what does that mean? What is, I have to add back expenses, the revenue, that's a grant. So it's not, I don't have to pay on the income, but I have to add back the expenses. What does that mean in layman's terms?
Yeah, so there's two things. So up to certain thresholds of your loan had to be used for payroll. The rest of it could be used for non-payroll costs. And so there's a calculation that goes into your forgiveness application that your bank will likely give you, either an Excel sheet of some type that they've created, or they'll have their own system that they'll want you to go through as far as the process. Once you arrive at exactly which form to use and what your forgiveness amount is, then mechanically on your tax return, there's two schools of thought, and there's not been clear guidance given by the IRS yet. When you're thinking about having to add back the expenses that go into the forgiveness calc, so those are payroll, mortgage interest, utilities, there's all sorts of things that go into how you first calculated your forgiveness or your PPP loan to begin with, right? So now, as part of the forgiveness calculation, they want to, on that, the SBA wants to see on that application, did you spend the money on what you said you were going to? And so those costs that you're going to accumulate and give to your bank that go into that forgiveness application, those costs up to your forgiveness amount need to be added back on your 2020 tax return. Now, you can either go through the trouble of actually reducing each category of expense, wages, et cetera, rents and so forth, or you could, some people feel like it's easier just to do one line item called maybe PPP forgiveness add back, or whatever you want to call it, and just do one line item as other income and leave the expense side alone. Either way, it nets out the same taxable income. And so there's not been clear guidance on how the IRS wants this done when we file our returns, but in the end, I think either way is acceptable. I don't know if that answers your question or not.
Yeah. So essentially it's something that you have to think about when you're doing your accounting to then prepare taxes, to make sure that you don't count that in other words, don't double count expenses, right?
Yeah, when you're preparing your tax return, you'll want to give your accountant a copy of your loan forgiveness application, because it'll actually bifurcate the different categories, and then that way they'll know how to treat that properly. Yeah, so unfortunately we got to go through this exercise. It's not something we can push off.
Right, and well, and I'm glad you mentioned it's important to understand that they're making everybody do that in 2020, whether they actually applied for forgiveness or whether it's just, pretty certain, if there's a certain level of certainty that they're going to be forgiven, then they have to deal with it this year.
Yeah, unfortunately we do. Yeah. So, and the guidance, I believe, was you have up to 10 months past your 24-week period to even apply. So you have time to apply. But even if you don't apply till next year, they still want the add back this year. If you only expect partial forgiveness, then you would do a partial add back. You could always amend later once you get the official forgiveness letter from the SBA. I sincerely hope that we do the add back, and then the Congress fixes this, and we'll go back and amend and get our taxpayers' money back, our clients' money back. So I'm hoping they get that done. There's a heavy lobby going on right now on the Hill to make it happen, and this is what our intent was. We'll see if it actually gets done. It probably won't get done this time before recess, but hopefully in the coming year.
Okay, well, thanks for clearing that up. And then the other assistance program that has caused some confusion, we've had a number of questions at the SBDC, as far as the EIDL disaster loans. Is there anything special we need to maybe consider about the EIDL disaster loans? I've got a lot of questions about is the loan income? Does it need to be counted as revenue?
Yeah, well, first of all, if you had a PPP loan, then any EIDL advance you received would come off of the forgiveness amounts on that PPP. So check with your bank, make sure that the EIDL, if you did receive an EIDL advance, they have it recorded properly. Some banks aren't doing that. And by the way, some banks are actually, I've heard, actually pressuring or asking their bank clients to actually go ahead and apply for forgiveness. And I'm wondering if they just want that receivable off their balance sheet and they want to get reimbursed from the SBA and move on. At 1% interest, it's not really making the banks a lot of money, and I'm sure they'd rather just have their balance sheet as clean as possible by year end. Right. There's a process where they go through and approve it, and then they send it off to the SBA for final approval. So if you receive something from the bank requesting that you do it, just know that you do have additional time if needed. Past the 24-week covered period, whenever that ended for you. But yeah, the EIDL advance, if you did not get a PPP loan, but you got an EIDL, if you look at how the SBA or the IRS is treating the taxability of the PPP loans, you know, common sense would tell you that the EIDL is also going to be taxable, even though they call it a grant or an advance. It just seems like they're making all the help that the SBA gave us this year is now becoming taxable, which is not what people thought and not what bankers were under the impression of. And so it's causing a little bit of chaos for year-end planning for sure.
Now, as far as that's for the advance. So this is the other confusion, is the EIDL advance is a grant, right? But the EIDL loan itself is still a loan, correct?
Yep. And
so that's treated differently when you do accounting as far as revenue and all that stuff, right?
Oh yeah. That, I mean, unless you actually receive forgiveness of the EIDL, that will stay on your balance sheet as a liability, and you'll term that out over whatever the loan terms are for EIDLs. But if you end up not having complete forgiveness on the PPP side, you know, you basically have a 1% loan over 5 years. But honestly, with the 24-week covered period that used to be 8-week, so many people are going to get full forgiveness. The only possibility of not receiving full forgiveness is if you didn't spend the money on what you were supposed to, or you didn't have enough covered costs, you know, the payroll, the rent, the things that you're supposed to spend the money on. Or you had a problem with FTE counts. You know, maybe you drastically reduced your salary wages, your people counts. And so when you compare the 24-week period to one of the two reference periods, which are either in 19 or there's a reference period for the first 2 months of this year, you know, if you have a problem there, you might have a haircut, so to speak, on the amount of forgiveness for PPP.
Okay. So that's good to keep in mind. Well, and so to move forward a little bit, looking forward into 2021, what's the forecast looking like for 2021 regarding taxes, given that there's all of this conversation about going back and retroactively maybe doing this or maybe doing that? Any guidance you can give us on what it looks like maybe moving forward, and so people can be thinking about planning?
Yeah, this is probably the most challenging planning year we've had in a long time. I don't use crystal balls, but it's just, what do we do? And so all the best we can do is at least say, okay, well, here's what could happen. And, you know, I don't know that traditional tax planning makes sense in every case for clients, but if you know what could happen, and by the way, they could always pass things late next year that are retroactive for 2020, which messes everything up. And so I will give you this. If you're interested in reading, there's a IRS publication 5348 called Get Ready to File. So that tells you a little bit of what we've already discussed today. So go out to irs.gov, publication 5348. And then there's also a publication 5349, Year-Round Tax Planning is for Everyone. So if you love reading IRS publications and you can't sleep tonight, go out there and grab publication 5348 or 5349. It gives you some year-end planning and dates and all that kind of thing we've already mentioned. But Biden has released certain tax proposals, just so you're aware, you know, mainly aimed at changes with higher income taxpayers. He wants to increase the top tax rate back to 39.6 from where it was at 37. He wants to tax capital gains. If you're a higher net worth individual, if your taxable income is over $1 million in any given year, he wants to tax capital gains at ordinary rates. So again, ordinary rates would go, the top rate would be 39.6. If you make more than 400,000 taxable income, you would have limited itemized deductions to a certain threshold. There would be other things like this could impact a lot of taxpayers. If you're a business owner and you are making more than 400,000 a year as a small business owner with taxable income over that threshold, the special 20% qualified business income deduction would be phased out. So again, keep in mind, if you're making more than 400 grand, a lot of these tax changes could impact you in your planning for 2021. There's some good things though. They're increasing certain child tax credits, dependent care credits, other things they're offering to help families. And one thing before I forget that I want to make sure everyone knows for 2020 that could really help you. The Family First Recovery Act, the first act that came out before the CARES Act, implemented certain sick leave credits and family wage credits for people that either suffered from COVID and couldn't work, or had to take off from work to care for a sick family member, or a child home from school, and that kind of thing. The credits are limited up to 10 days, but they vary between, I think, 511 per day if your self-employment income is high enough, or there's another threshold of $200 per day, depending on what category of care you're in, whether you were sick yourself and couldn't work, or if you had to care for someone who was sick. So there are credits, refundable credits available to a lot of small business people out there this year that I want to make sure you know about and take advantage of if you were impacted by COVID in any way. And so I know in our case, we have a checklist that's going to be asking our clients to tell us, were you impacted by COVID in these different ways, so we can make sure we get the credits applied to your tax returns. It's, you know, between $2 to $5 grand. That's real money to a lot of people that will benefit them this year when there's been a lot of chaos going on. So just something to think about.
Excellent. And then just sort of to wrap up, you know, what can people be thinking about now to sort of minimize their taxes moving forward into the new year?
Well, it depends on if you have a business, you know, the traditional tax planning where you're trying to push the can down the road a little bit, delaying receipts, doing advanced prepayments. If you're on the cash method, that always helps if you're trying to minimize your taxable income and push it out. If you're in the camp that you think that your tax rates are going to go up, you know, then you would actually want to have income tax today at a lower rate. But maybe the deduction, you'd want to benefit of the deduction or prepayments next year at the higher rate. So it kind of depends on what your philosophy is and your outlook is on the tax policy in the country. If you need some additional equipment and you can place it in service by year end, that always helps. Take advantage of the Section 179 immediate expensing deductions, or the bonus depreciation deductions. So there's things like that that can be done for tax planning. Keep in mind, you still have the ability to contribute to your retirement plan for self-employed retirement plans that, you know, your SEP IRAs, solo 401ks. Now you can do it after year end, all the way through the next year, your extended due date of your personal tax return. Or if you have a spouse who works and you don't, you could do a spousal IRA. That always helps. So there's a lot of little things like that. Even for those folks who don't itemize this year and they take the standard deduction, which was greatly increased about 3 years ago, there's now an additional $300 charitable deduction that you can take that helps. So lots of little things that don't apply to everybody, but if it applies to you, it could matter. You know, so check with your accountant or give us a call. We'll be glad to kind of guide you forward on that.
Excellent. Well, thank you again, Clint. I really appreciate the time. Hopefully this information is helpful in people both trying to wind up here in 2020 and then looking to get ready for tax season in January 2021. We'll circle back around and chat with you again in the new year, see what happens.
Yeah, more than ever, it's really important to stay in touch with your tax team, your accounting team, to make sure that you're on the road together. It's not just a surprise when you file your tax return. You know where you're headed. Thanks, Eric.
Thank you.